Hello, guys. Welcome you all to the last knockings of the chapter cash flow and fund flow statement. So, today we are going to cover the cash flow statement as per the indirect method. In the last class, we have discussed about the direct method as of now. Yes. And now we are going to talk about the indirect method. In the indirect method, there is a typical format which we need to follow for the cash flow from operating activities. So, I will just give you a recap and then we will start with this indirect method. Okay, so in our cash flow statement, we have three activities, that is CFS belongs to three activities. First was your operating activities, and operating activities is nothing but what your business is really relied upon, the things you manufacture, you trade in. Okay, that is about your operating activities. Then what the firm other than operating does, that is the investing part. That is investing activities. So that was your second part. And the last part was your financing activities. Financing means from where you have got the funding, what is the source of that funding, and what are the payment you are making to that funding source. That may be your dividend, that may be your interest, or that might be your any other expenditure which you are incurring on that source. So operating is majorly your operations, that is your manufacturer, or you are a trader, or even you are a service provider. So whatever service you are providing, that is the bifurcation of these operations. Then we have investing activities, that might be investing in your plant and machinery, furniture and fixtures. Okay, then your shares, mutual funds, land and building, etc. Any investment in these are part of your investing activities, and even the profit from these all activities will also form part of your investing activities. Last is your financing activities, that might be your share capital, that is equity. Then you have share capital preference, you have long term debt. Okay, you have debentures, bank loan, that is also included in your debt, etc. So any type of payment to them, that is interest or dividend, that is also covered under the financing activities. Okay, here obviously profit would include the losses as well. Okay, so these are the bifurcation of all the activities which we have gone through. Now in the operating activities, what we have seen so far is that we only include whatever is received in the cash. See, like in the direct method, we have seen sales minus payment in cash. So then we got the cash generated from operation. Then we deducted the income tax. We got the cash flow before extraordinary items. And then we made the adjustment for extraordinary income, that is plus, extraordinary loss minus, and then we got the cash flow from operating activities. But now the format will be changed. So let's start with the cash flow statement indirect method. What does your indirect method says? So basically you will have the same format, that is your particulars. You can have two columns, inner column and a outer column for amounts. So that would be your basic format of your cash flow statement. First part would obviously be your cash flow from operating activities. So first part is cash flow from operating activities, the calculation which we are going to do. Then we will have another part which would say cash flow for investing activities, and at last the cash flow from financing activities. So when you have got all the totals of cash flow from operating, cash flow from investing, and cash flow from financing, then you are going to calculate the net increase or in bracket decrease in cash and cash equivalents. That is the main changes in your cash and cash equivalents. Then you will add opening balance of cash and cash equivalents. From there, you will get the closing balance of cash and cash equivalents. Okay, so that is the format which you will go through. I think nothing has changed. All the things which we have covered already is the part of this format. But sir, what is the change? This is the plain vanilla thing which we were doing earlier. But the change lies in your operating activities. So here the start point of your operating activities has been changed. This would be net profit instead of the sales and everything which we were doing in cash. So let us go to the format first. The first starting point is net profit before tax and extraordinary items. So you have to, if you have a net profit after tax and extraordinary items, then you need to first calculate the net profit before tax and extraordinary items. So why we are calculating this? Because we have a separate presentation of tax as well as your extraordinary items. So for example, just I'm taking an example where net profit after considering everything, all items, let's say it is rupees 30,000, income tax paid rupees 10,000 is given. Then you have loss by fire 15,000 and profit from insurance claim rupees 5,000. So obviously these three things are already adjusted into this net profit. But for the presentation and for the clear view of this cash flow statement, what we are going to do, we are going to calculate net profit before tax and extraordinary items. So for calculating the net profit before tax and extraordinary item, we will start with net profit after tax, and extraordinary item was how much? 30,000. So the tax has been already deducted. I want it before tax, so I will add the tax amount, which is 10,000. So now 40,000, which I have received, is net profit before tax, but after extraordinary items. Okay, so what are the extraordinary items in my case? The loss by fire is an extraordinary item, as well as profit from the insurance claim is also an extraordinary item. However, the first one, the loss by fire, is nothing but extraordinary loss. This might have been deducted from our calculation. So what I will do, I will add back extraordinary loss, and this extraordinary income that has been included in our profit. So I will exclude it, extraordinary income. So this is loss by fire and this is profit on insurance claim. So loss by fire 15,000 will be added. Here also 10,000 was added, and the 5,000, which is profit on insurance claim, will be subtracted. So my net profit, which I wanted, net profit before tax and extraordinary item is 50,000. And this working note will become the start point of my question. Okay, this working note will become the start point of my question. So here I will write net profit before tax and extraordinary items. And now, obviously, the tax will be subtracted, the extraordinary items will be adjusted, and everything will be given effect, but very systematically in a sequence, so that we get to know what is the cash which is generated from our operations, that is doing the business, what is the cash we have generated, and what are the other extraordinary items, what are the tax items which we can consider, and what are the movements in the working capital. Okay, there might be some cash which is stuck into our working capital. For example, earlier I have 10,000 rupees of debtors. This is the opening balance of my debtors. And in the closing balance, the debtors is of 12,000. That means extra rupees 2,000 is stuck in the name of debtors. That means I have got less cash of rupees 2,000. That is why my debtor balance has gone up. So what I will do, I will deduct 2,000 from this calculation. Okay, so there is one formula, one trick to understand this that I'm going to tell you when I will come to that part. But that is the adjustments which we are going through all of these parts. So to explain you everything in very, very detail, let me go to my trading and P&L account format. Okay, let us prepare a format for trading and P&L account. So everyone in this class already knows we have some opening stock in the starting, then we have some purchases minus purchase return. We have some direct expenses. We have some sales minus sales return. We have some closing stock, and whatever is the balancing figure, we have gross profit or the gross loss, whatever the case may be. In our case, let us assume we have a gross profit. So whatever is your gross profit, that is the end point of your trading account. However, the start point of your P&L account. So your gross profit will be brought down over here and carried down from upside, right? So that is the start point of what your P&L account. Now, what I am going to do, we are going to write down all the expenses. We have depreciation. We have amortization. Sir, what is the difference between amortization and depreciation? See, my dear, depreciation is of your tangible assets like the machines, plants, furnitures, etc. That is where your depreciation is charged upon. But for the intangible items, there is amortization. For example, software, patent rights, goodwill, that is the amortization. Then we have interest on loan, or I would say I would have loss by fire. In the same way, I will have by interest income. By we have got profit on insurance as well as yes. Okay. and we have some other expenses, and we have some other income, and at last we calculate the net profit. We also have one more thing, that is the tax to income tax, right? And then at last we have the net profit. So in the end, when we have the net profit, we transfer it to the balance sheet, right? Now, if you see everything over here, so from my gross profit, the interest income is added, profit and insurance is added, other income is added. Depreciation is subtracted, amortization is subtracted, interest on loan is subtracted, loss by fire is subtracted, other expenses subtracted, income taxes subtracted, then we have finally reached upon the net profit. So obviously all the credit items is added and all the debit items are deducted, then only we arrive at my net profit. Sir, we know that is nothing new. But my dear, there are some items for which there is no cash outflow, no cash is going out. For example, depreciation. We are not paying this out of our pocket. This is just a charge of the use of the asset over the systematic useful life of the asset, right? So this is a non-cash expenditure, and every non-cash expenditure should be added back to the cash flow statement because no cash is going out. We are my starting point is what? Net profit, right? So in net profit, this depreciation is deducted already. This depreciation is deducted already. However, I haven't paid any cash, so there would be no cash outflow. Therefore, in our format, we will add back the depreciation. Okay, that is the first part. Or if there is any amortization, just make a slash and write depreciation or amortization. That would be added back. In the same way, if we have foreign exchange gain or loss, that is also just an adjustment entry, not actual cash going out or coming in. That is why it will be added back. Any investment which we have made, obviously that investment is not part of my P&L, but if it is, then we have to exclude it. If there is gain or loss on sale of fixed asset, we will exclude from the operating activities, and obviously we will include it into the uh, investing activities. That is cash flow from investing. It is not part of operating because fixed assets is in my investing activity, not in my operating activities. Then we have interest or dividend. Interest or dividend is again a part of your financing activities or your investing activities. So that is why it will be adjusted over here. Now what I have got, I have got the operating profit. I have got OP, not overpowered, obviously. OP, that is operating profit before WC changes. WC means working capital. Okay. OP before WC changes. Now we have to account for all the working capital changes. Now this is the time to remember one rule. If current asset increases, so deduct it. If current asset is increasing, deduct it. If current asset decreases, add it. Okay, you need to deduct when the current asset is increasing. You have to add when current asset is decreasing. When your current liability is increasing, add again. When your current liability decreases, subtract. So why we are doing this adjustment? What is the logic behind this addition and subtraction? There is a very simple logic. When your current asset is increasing, that means my money is getting stuck in that current asset. So my cash will reduce. That is the logic for increasing, reducing the cash flow from your net profit. Okay, then we have when current asset is decreasing, that means some asset is being sold, so I have got cash out of it. That cash will be added to my cash flow statement, so that is now added. Then we have current liability is increasing, that means some items are there for which I have not made the payment. That is why the current liability has been increased as of now. And if I have not made the payment, my liability is increased, that means cash has not gone out, so that will be added right now. And when cash will go out, the current liability will decrease, then I will subtract it from here. So that is the adjustment which we need to do. Now, how to find the current asset is increasing or decreasing? For that, you need to look at the balance sheet. For example, I have one NCERT question of class 12. Here you can see there is a balance sheet given for March 31st, 2017, and one more balance sheet for March 31st, 2016. So these are your opening figures. These are your closing figures. Here you can see the trade receivables, the first item on my list, has been decreased by 20 lakhs. So this will be added to the cash flow. You can see here. So they have done this calculation over here. One second. Okay, so I need to read the full question for this. Just have a look. Charles Limited made a profit of 1 lakh after charging depreciation of rupees 20,000 on asset and transfer to general reserve of 30,000. The goodwill was amortized at 7,000 and gain on sale of machinery was 3,000. Other information available to you: changes in the value of the current assets and liability are trade receivables shown as increase of 3,000. So trade receivable has been showing an increase of 3,000. So if it is increased, it has been deducted. It has been deducted, my dear. I'm not sure why this additional information is given. Just ignore that. Then we have trade payables has an increase of 6,000. So if current liability is increasing, my cash flow will also increase. So plus 6,000, that is increase in trade payables. Then we have prepaid expenses, an increase of 200. My current asset has increased. So current asset increase, that means minus 200. At last, outstanding expenses decreased by 2,000. So outstanding expenses are liability, and if liability reduces, cash flow also reduces, that is by 2,000. Okay, so this all has been called the adjustment of working capital changes. In our format, I was at the operating profit before working capital changes. Now these are all the adjustment for working capital changes. Once you have done this adjustment, you will get one figure called which is cash generated from operations. You will get the figure called cash generated from operations. And now you have to deduct all those items which are not part of your operating. That is, for example, if any interest is paid, so you can deduct it. Any direct taxes is paid, so you can also deduct it. Now you have got the cash before extraordinary items. Cash before extraordinary items. Then you are going to do the adjustment for the extraordinary items. That might be your deferred revenue. And then finally you will get the cash flow from operating activities. So this is the format which is changed right now. Everything else is same. Everything else is same, my dear. Rest purchase of fixed asset is a negative because you have purchased it. Sale of fixed asset is a positive. Sale of investments positive. Purchase of investment minus. Interest received plus cash coming in plus dividend received again plus loan to subsidiaries again plus, that is an investment. Then we have got the net cash flow from investing activities. Now finally the financing activities. So if you have issued any share capital, you have got any long-term borrowing, so add. If you have repaid anything, minus. Dividend has been paid, minus. And we have got the net cash flow from financing activity by totaling all the cash flow from operating activity plus cash flow from investing activity plus cash flow from financing activity. You will get this net increase or decrease in the cash and cash equivalents during the period. And when you will add here the opening balance of cash and cash equivalent at the beginning of the year, so finally the figure which you will get will be called the closing balance of the cash and cash equivalent of the year, my dear. Is it clear, everyone? Any doubts till now? Yes or no? Is the picture clear to everyone in this class? So by this we have completed the format of indirect method. Obviously, you don't need to prepare the whole format in your exam because this is a multiple choice question. So you just need to understand what needs to be added, what needs to be subtracted, and that is the reason you need to be aware of the logic. Now let's go back to the logic again. Now you will very much in a crystal clear manner understand why the things are added, why the things are subtracted. For example, in this format, just assume we have zero opening stock, we have zero closing stock. Let's say I have a purchase of just 1,000 rupees. I have sales of 1,500 rupees. So, and my direct expenses are zero. So obviously my gross profit would be 500 rupees. And this 500 would be brought down over here. Let's say we have nothing other than this all information. Let's say everything else is a zero. Everything else is a zero. So obviously my net profit would also be 500 rupees. Okay. So now as per my this method of cash flow from operating activities, what I am doing, I am taking the base as a net profit. So what is my net profit? 500. Looking at the trading and P&L account, you can clearly see that the goods are sold of 1,500. So obviously, if I sell something, I might have received some cash. Yes or no? Yes, sir. We have received some cash. And if I have purchased something, I have paid the cash. So 1,500 is coming in, 1,000 rupees has gone out. How much I am left with? Sir, I am left with 500 rupees, and that is only my profit. And obviously, in the operating activities, that 500 is considered. Everything is good till now. Now let's make the changes. Sir, there is one more information given that the purchases were total 1,000, but out of this 1,000, 800 has been paid in cash. 200 is on credit, which will be paid later on. 800 in cash and 200 on credit. So by logic, now you see my sales was of 1,500 and my cash purchase was of 800. So how much cash should I have in my balance sheet? I should have 700 my cash. This should be my cash balance. Okay. But right now, as per the accrual concept, I have booked full 1,000 rupees of purchases over here. And that is why I'm getting a gross profit of 500 here, the net profit of 500 here. And in my cash flow, it is still reflecting the net profit of 500, which is not tallied with my balance sheet. My balance sheet is saying I have a 700 rupees of cash. So now what will happen? If you will see the balance sheet, you have 200 rupees on credit. By this 200, your liability would have been increased. That means your creditors, let's say earlier, your creditors were 1,000. Now your creditor would increase by 200 because I have taken goods on credit. So what is the increase in creditors? Sir, how to find the increase or decrease? Always do closing balance minus opening balance. closing balance minus opening balance. So this was my closing balance. This was my opening balance. So this would give me 1200 minus 1000. That is 200. And therefore, whenever your current liability is increasing, that means you have not paid the cash to them, but your profit is reduced because of the accrual concept. So now you have to add back that 200 to your cash flow statement. So always whenever the current liability increases, your 200 will be whatever the balance it has been increased, that will add. So that will be add increase in current liability 200. Now my total would be 700, and this will tally with my balance sheet. That is the logic behind including the current liability increase in the cash flow. Similarly, if we have a decrease in the current liability, that means that item has been paid, and by that amount we will subtract the cash. Okay. Now let us go to the asset part. Now just forget about this cash transaction or the credit transaction. Now let's say every purchase is in cash, but now out of sales, 1200 sales was for cash and 300 was for credit. So this 300 is my data. 300 is my data. However, again, in my cash flow statement, you will see that my starting point would be this 500 rupees. Yes or no? Yes, sir. My starting point would be 500 rupees. However, as per the logic, I have not received this 1500. I have just received 1200, and out of that, I have paid to the purchases to my vendors of 1000. So I am left with the balance of just 200 rupees. The balance sheet will show the cash of rupees 200, but right now what is it showing? It is showing a net profit of 500. So now, sir, what I am going to do over here, so you can see that the 300 is your debtors. Earlier, let's say you have a debtor balance of, in the opening you had a balance of 0, in the closing you have a debtor balance of 300. So how much is the increase in debtors? Sir, what formula? Again, the same formula, closing balance minus opening balance. So closing balance is 300, the opening balance is 0. So the increase is 300. The 300 is in my debtors. That means that cash is stuck in my debtor. I have not received that money. So that is why I will deduct it from my cash flow statement. So I will deduct the increase in current assets. 300 would be deducted and I will get the balance of 200, which will match with my balance sheet cash. That is the logic behind why we subtract the increase in current asset from the cash flow statement. In the same way, if I have received any cash, my current assets will be reduced and my cash will be increased. So I will add it. Any decrease in the current asset would be added. Any increase in the current asset would be subtracted. So that is the logic behind all of that. Similarly, now you can see the depreciation, if it is deducted, please add it back because it is a non-cash item. What is it? It is a non-cash item. In the same way, amortization is also a non-cash item. Even your foreign exchange gain loss is also a non-cash item, my dear. So all these items would be added back to the net profit because these are non-cash items. Then we have some items of the other heads. Other heads means, for example, if we have paid any interest on loan, we have paid any dividend, so that will be added back because that will be considered into the financing activities or the investing activities. That is the logic behind your other head items, right? Then going to extraordinary items, if it is already subtracted, please add it back so that we can get a figure which is from the operations only. In the same way here also, we will If the profit is included in the net profit, we will deduct that, which we have already done in the example where I show you the adjustment for the extraordinary items as well as the income tax. So we have added back, and then at a later stage that will be deducted. Like here you can see the direct tax has been deducted later on. Earlier it was included, but later on the direct taxes was deducted from here. Okay. So that is how we deal with the cash flow from your operating activities in the indirect method. Let us quickly do one question and just solve the operating part of it. Okay. Let's do the same question which we were doing earlier. The Charles Limited has made a profit of rupees 1 lakh. So let us start putting up the figures into our format, which we have seen right now. So we are just solving the operating activities, and the start point is the net profit which they have given us. The start point is 1 lakh rupees. That is the net profit. Okay. But it is after charging depreciation of 20,000. So depreciation is charged. We will add it back. So depreciation is in this line. The depreciation is how much? It is 20,000. So this is being added back. Then we have transfer to general reserve. So there is some amount which has been transferred to a general reserve. That was also your profit. So you will add back that profit of 30,000 plus transfer to reserves. That is 30,000. Okay. Then we have goodwill amortized of rupees 7,000. So that is again a non-cash item. So you will add back amortization of goodwill 7,000. Moving on, I have gain on sale of machinery, which is rupees 3,000. So there is a gain which is other head income. This will come under gain or loss from fixed assets. So 3,000 is not the operating income, but it is the investing income. So I will subtract it from my operating profit. Then we have other information available, that is the changes in value of the current assets and current liabilities, which are trade payables shown an increase of 3,000. So trade payable is a current asset. If it is increase in trade receivable, sorry, it is a receivable. Yes, it shows an increase of 3,000. That means it will be deducted. So 3,000 will be deducted. Then we have next trade payable shows an increase of 6,000. So increase in trade payable 6,000 will be added because it is a current liability. Prepaid expenses an increase of 200. So again, my current asset is increasing. Increase in prepaid, that is of 200. This will be subtracted. And lastly, there is a decrease in outstanding expenses of 2,000. So that is decrease in current liability, that is outstanding expenses. How much it was? 2,000. So that will be subtracted again. Then we have to find the cash flow from operating activities. So just do the total from here. So from here, you can see 1 lakh plus, 30,000 plus, 20,000 plus, and 7,000 plus, as well as 3,000 minus. So what figure you will get over here is 1 lakh 54,000, I guess. Please confirm the calculation, everyone. Yes, sir. 1 lakh 54,000. That is the calculation. And that is my operating profit before working capital changes. Now let us do the working capital changes. 1 lakh 54,000 minus 3 plus 6 minus 200 and minus 2,000. So this would give you 1 lakh 54,800, and that will be my cash flow from operating activities. 154,800 as per this format. Let us check our answer. So yes, it is the same. Net cash flow from operating activities is 154,800. So all you need to do is understand how you are going to add the figures, how you are going to deduct that figures, and the logic behind that. So your cash flow from your indirect activities is now complete. Okay, my dear. Now, let us go to the last topic of this chapter, which is not very much important, but yes, it is a part of the chapter. So we need to do that is the fund flow statement. Okay. Before starting the fund flow, let us understand what the fund flow is all about. As a student, when I was studying this topic, the only thing which strike my mind, sir, fund means cash only. And I have just now understood both the methods of cash flow statement. So why am I studying the fund flow statement? So it was important to know first the difference between the fund flow statement and the cash flow statement. So let us first focus on that topic. The cash flow statement is focusing only on cash. Only cash transaction, no accrual transaction has been considered. However, the fund flow statement consider both cash and accrual. The cash flow statement has a opening balance, has a closing balance, and it has a changes in the year, changes in the cash flow statement. It does not have the opening, it does not have the closing, it just shows the changes. So this shows cash flow statement shows the change in cash. However, the fund flow statement shows the changes in funds, and by fund they mean the working capital. So what is working capital? Working capital is nothing but your all current assets minus all current liability. All current assets minus all current liabilities, and the change in all current assets minus all current liabilities is shown in your fund flow statement. That is the part of your fund flow statement. It does not focuses on cash because already the cash flow statement is looking into it, but we are focusing on the funds, how much funds we have, right? It may be in the form of cash, it may be in the form of other assets. So, exam note. All transactions which will result in change in balance of current asset or current liability will form part of fund flow statement. So all the transactions which will result into changes in the balance of current asset or current liability will form part of fund flow statement. For example, sold machinery for rupees 30,000. Okay, so if you have sold machinery for 30,000, what has been done? Your fixed assets is now reduced, but your current asset is increased. And because your current asset is increased, this will form part of your fund flow statement. But if I say sold machinery, but cash will be received after 2 months, that would be rupees 40,000. So by this 40,000, my fixed assets is reduced. Have I received any cash? No, sir, it is not received, but it will be received. So by this, I have a receivable from a person. My receivable balance is increased. That means my current asset is increased. Therefore, it would come under the fund flow statement. It will come under the fund flow statement because my current asset is increased. Okay, sir. Let's do one more example. Sold machine rupees 40,000 in exchange of 100 shares of X Limited. So now my machine value has gone down, but my shares, my investment has increased. There is no current asset in this because machine was also my fixed asset. One fixed asset has fallen down and one fixed asset has increased. There is no changes. Therefore, it will not form the part of fund flow statement. Okay. So by this descriptive example, now you know whatever is impacting either your current assets or your current liabilities, that will form part of your fund flow statement. Otherwise, it will not form the part of fund flow statement. Okay, just now read it from the book. So fund means net working capital, that is current assets minus current liabilities. Fund flow shows all sources and uses of the fund in the relevant period. That means from where you have received the fund, that is sources. So in my example, in all the first two cases, what I have done, I have sold my machine and I have got some fund. So that would be sources of fund. This is my sources of fund that I have sold my machine. However, if I purchase a machinery, so that I will say is my uses of the fund, or I would say the negative ones would be my application of fund. So we are making a statement about sources of fund as well as your application of fund. The net result is that it shows a net increase or decrease in the working capital employed into the business. Another name for fund flow statement is statement of sources and application of funds. That is also a 1 mark question, important for all of you. Okay, fund flow measure the changes in working capital, that is the change in the current assets and or changes in the current liabilities. What we need to consider, just read out this whole thing up till point number from please consider the following till point number 5. You have 10 minutes, just read out the whole content and let me know if you have any doubt. Okay, just start reading it. Okay, guys, I think you might have came across the same points which we have already discussed till now. Now, let us shift our focus into the practical question of a fund flow statement. So let us do one question. We have some more content. Hope you have gone through that too. If not, just do it after the class. We have the differences which we have covered. Like for example, the fund flow is based on the accrual accounting system where the cash flow is only for the cash and cash equivalent. It shows the changes in the working capital. It shows the changes in the cash and cash equivalent. There is no opening and closing balances. Here we have opening and closing both. It records the sources and application of fund. It records the inflows and outflows of cash. The net result is the increase or decrease in the working capital. Here, the net result is the increase or decrease in the cash. It is accompanied by statement showing changes in working capital. There is no statement required for the cash flow statement, and it shows the funds generated and applied as regard to long-term assets and long-term liabilities and capital. Here, it shows the cash flow from operating, financing, and investing activities. So now you have given one question over here. You have one balance sheet of ARM company of 31st of March 2020. They have given you the previous year data also of 31st of March 2019 and then the current year data of 31st of March 2020. So we have liabilities on the left and the assets on the right. We have the opening figures, we have the closing figures. Here also we have the opening figures and we have the closing figures, right? Moving on, if I say, you can see that earlier your share capital was 3 lakh, now it is 4 lakhs 50,000. So that means there is a change in your share capital. That means some share might have been issued, my dear. So there would be some information given downstairs. Downstairs means downside. Okay. In the same way, you can see that there is change in securities premium, that from 20,000 your securities premium is increased. So you might have received some premium. Then you have general reserve balance increased by 30,000, PNL increased by 20,000, creditors increased by 3,000, provision for tax increased by 37,000, proposed dividend. So whatever dividend was proposed, it will be paid in current year. Always remember that. It will be paid in the current year. And whatever dividend is declared in the current year, it will be paid in following year, not in the current year. Because obviously, if you declare the dividend today, it will be paid after some period of time where it is approved by the board of directors in the meeting. Okay, so it takes time because this dividend is now being proposed, it will become final and then it will be paid. So in the current year, it is just proposed, it will be paid in the following year. So this money has not gone out yet, but this will go out in the next year. And the previous year proposed is now final and it will go out in the current year. Okay. Then we have machinery. Opening balance was 2 lakhs. The closing is 221. Stock 272. 350, debtors 80, 79, cash 20, 115, bank 105 and 147, and that is the end of your balance sheet. Other information they have given you that depreciation on machinery is to be charged at the rate 15% per annum. A machine with a book value of 40,000 was sold for 55,000. So 15,000 is the gain from sale of machine on 1st of April 2019. So that is on the opening date. And a new machine is purchased for 1 lakh. If a new machine is purchased, you need to consider the depreciation on that machine as well. And we have the fresh equity issue at a premium. That is on 1st of April 2019. And we need to prepare the statement of changes in the working capital as well as one more information is given, that is the net profit for the year is 55,000 rupees. Okay, that is the starting point. So if you have a net profit of 55,000, what you will do? There was a profit on sale of machinery. It is not our operating income, so we will reduce it from here. We have got our operating profit right now. Whatever is the depreciation, that is a non-cash item, 39,000 is the calculated depreciation that would be added back. Then you will have the funds from the operating activities. So are we calculating the cash flow from operating activities? No, my dear. I need this to put it into my fund flow statement. Okay. That is your working note number one. By this, I have got the 79,000, which is nothing but my, this is my fund flow statement where I have sources and I have application. First is the fund from operations, which I have received 79,000 from my working note, my dear. 79,000 is the fund from operations. Then what we have equity shares issued. Now see, the equity share in the earlier year was 3 lakh and now it is 4 lakh 50,000. That means 1 lakh 50,000 has been issued in the current year, and even the securities premium is of 20,000 rupees. So from this issue, I have received 1 lakh 70,000, and this 1 lakh 70,000 is the fund from equity shares. So directly we can write it as in the sources, issue of equity at premium 1 lakh 70,000, and we have sold one machinery that is of 55,000. Sir, 55 full you have written, that includes the profit. Yes, my dear, that is why I have subtracted the profit from here and included it over here for a better presentation. Okay. Then we also purchased one machinery that is of 1 lakh, that is also mentioned over here. Last year dividend would be paid in the current year, that is 30,000, and the balancing figure which you have got, my dear, is the net increase in the working capital of 1 lakh 74,000. Okay. Now, if I want to tally this change in working capital, so there is one statement also prepared, that is the statement of changes in working capital from 31st of March 2011 till 31st of March 2012. Okay, years they have given incorrect, but let me check it from here. Here we have 19 and 20, and then they have given here 11, 12. So just consider them 19 and 20 right now. So you can see there is change in stock, debtors, cash, bank. Okay, these are all your current assets. You have the opening figures, you have the closing figures, you have the increase figures, and you have the decrease figures. Now just try to do yourself this changes and you will get the correct answer. That is 215 minus 41 is nothing but your 1,79,000. That is the 1,74,000. Sorry, that is the net changes in your working capital. Try to do this, everyone. You have 50. If you have any doubts, please post it into the comment box. Okay. If the doubt is relating to what is current assets, sir, what is current liabilities, so obviously your stock, debtors, cash, bank balances, prepaid expenses, these all will be your current assets, and your creditors, provision for tax, that would be your current liabilities. And there might be one more question coming into your mind looking at the balance sheet, that why, sir, general reserve, PNL, securities premium, share capital is not included over here? Because this is the fund of the owners and it is not a creditor. This is not an external creditor. External creditor is the creditors which is mentioned over here, as well as the provision for tax, because this tax is payable to the government. Okay. Dividend is nothing but it is proposed right now. So 30,000 is paid. That liability is gone in the current year. And now we have a new liability of 40,000. This is also a part of profit, which is not paid in the current year, but it will be paid in the following year. That is why it is not included in the statement of changes in working capital. Okay. So that was the net figure of your working capital. And then we have the changes. Changes was 2,15,000, a increase in working capital, 41,000, a decrease in working capital. And that is the reason we got a net increase of plus 1,74,000. Okay, everyone. So that was all about your fund flow statement. Nothing more to be emphasized upon. This is not very much important, but yes, from the um, examination perspective, you need to know some rules, and some rules also include if your net capital current asset is increased, sorry, if your net current asset decreases, your working capital will also decrease, because obviously the formula is current asset minus current liabilities. This is your working capital. So if your current asset is reducing, then your working capital will also reduce. Simple logic. If your current asset is increasing, your current liability is same, then your working capital will increase. In the same way, if the current asset is same, but the current liability is increasing, then working capital will reduce because your amount is stuck in the current liabilities. And if your current liability is reducing, your working capital will increase. So that is the four logic which they have given over here. You can have a look and your question will never go wrong. Okay. You have some advantages of the cash flow statement and you have the disadvantages of the cash flow statement. Advantages are many. The only disadvantage is that it does not consider the non-cash transaction. There might be a case that is important. There will be a significant non-cash transaction, but it is not covered in the cash flow statement. And it also does not take into consideration the fundamental accounting concept of accrual. It is only and only on cash basis because it is only cash basis. Okay. And at last, we have the summary of this chapter where you have the cash flow and fund flow statement, important as a management tool, and it is mandatory along with the P&L and the balance sheet as a part of final account of the companies. The two methods of cash flow are direct and indirect. The end results are the same. That is the closing balance of cash and cash equivalents. Cash flow statements measure the changes in the cash and cash equivalent over a period under consideration. Fund flow measure the changes in the working capital, and working capital is current asset minus current liabilities. Fund flow statement shows the sources and the uses of the fund. So that was everything we covered in this chapter today and in the earlier lectures. Now, my dear, I am just left with one more topic of your course, that is called ratio analysis. This is again a easy one and a scoring one for you guys, the ratio analysis. But you need to be more attentive in this while solving the questions in exam, because even one figure is captured by you incorrectly, the whole answer would be incorrect, right? So that is the last part which we are going to cover, called ratio analysis, and our whole curriculum for your CAT course, paper number 1, will be completed. Okay, so that's it from my side for today. See you in the next class, everyone. Till then, solve as many as questions you can and do practice as many of as MCQs you can, because these MCQs are very, very important to understand what's coming in exam, my dear. If you do not know what is coming in the exam, everything will be a waste. Okay, so for understanding your examination approach, you need to know that what things you need to consider while revising everything. You have some MCQs test, or I would say the mock tests which are planned for you guys, and in those mock tests you will be tested for these type of MCQs. That will show your preparation level, and that is a chance for your improvement. But before going to that improvement stage, you need to work hard on your skills which you have got. Okay, so subject to one chapter which is remaining, everything is complete as of now. Just practice as much as you can and bring on more and more doubts in the next session. See you then. Bye bye. Take care.